Hi, good morning this morning. This is Malik KB, and this is the last video in this course Forex Data Kit. And today we are going to talk about risk management. Okay, like I said in the beginning of this course, risk management is very important. You have to know your risk management. You must have management if you really want to succeed and make profit in this industry. So now the first thing you need to understand is you have to know when to enter a trade and when to exit. How much are you risking and how much are you looking for? So they are very important. You must not just jump into the market just because the candle is going up. You just jump and take a buy. When the candle is going down, you just jump and no. You need to have your confirmation. You need to have a reason to take the trade. So if the market goes against you, at least you have done your best and you have done what you think is right, not just jumping to a trade anyhow. Now, the second thing you need to understand is your position. You have to know where to put your positions. You need to know where to add layer. You need to know when not to add layer. Market will there's something they used to say. The hardest thing in forex is closing a losing trade. It is very hard while you see you losing money and you close that. I know it's very hard because I've tried it and it's always hard for me, but then I try to you just have to know how to manage it. So closing a losing trade it's actually very hard. So but then there is a certain stage where you just have to close the trade when the market is going against you. So you have to understand when to put your position, add your layers. You must know where not to add layers. Now the next thing is lot size. You must know the lot size you are going to use. You must know the lot size you are going to use. You cannot use a very big lot size while you have a little amount of money. You cannot just have 50k and start using 10.0, 1.0, 0.5, for example, or 0.1. That's mini lot size, I be something like that. It's actually not good. So you have to understand the lot size you are going to use. I think I will check a document and share it with you guys where I showed you the amount and the lot size you all should be using. So you have to know when to use big lot size and when to use small lot size. It's also part of risk management. I think I've explained lot size and what it means and how they can affect or how they can improve your trades. The next thing is you should always avoid revenge trading. Market chop your money, then there's certain way you need to understand there are bad days and good days in trading. So when you make losses, you have to like just take that and move on. Don't allow it to consume you and don't just continue playing around with the market, trying to push so hard until you recover. So let me just give you an example. Today I make a lot of losses in the market, but I just feel it's okay. Yesterday I make a lot of profit, so today if I lose, that's fine. There are good days, there are bad days. So just make sure that your good days are more than your bad days. Just spend more time in winning trade than spending more time on losing trade. So let me just show you my history. Look at it. I lost $162 today. Just now I just finished making those losses and I come back to record this video. So as you can see, the first sell buy I took, there are three positions, zero, this one, this one, and this one. These are the three positions I took. The market took me out on stop loss. Then I still went back for a recovery, but then market still went and hit my stop loss again. So I just decided to not trade again. I just decided not to trade again. You see this zone, this is where I took my buy and my stop loss just below this wicks, knowing fully that market is not supposed to break these zones to go down, but then market broke the zone took me out of stop loss and I made losses. Then when market came to this zone, I also catch another buy and put my stop loss just below here, knowing fully that market is not supposed to go down. It's supposed to just respect this area. But then the market decided to do what I explained, I think, earlier about stop loss hunt. So it just took me out and just go back because the market movers or the market knew I'm going to put my stop loss just below this. So the market decided to take me out. So I just and decided and the market moved. The market started going for the buy. Had it been I took the buy again, I would have maybe recovered by now. But then I just decided to take some break for today. Maybe I'll try tomorrow to see if I can recover my losses. So you don't have to recover everything at once or instantly. You just take your time. If you make loss, you take your time. Then always use stop loss. Now, had it been I did not use stop loss, I will have lost more than what I lose now. So it's good to always use stop loss. Make sure you know what you are risking and your risk to reward, that is your ratio, your winning ratio. You cannot put your stop loss risking 20,000 while aiming for 5,000. It doesn't make sense. It's just like going to buy something in the market at 10,000 and selling it at 5,000. You are losing. So your risk to reward should be reward should be higher than your risk. If you are risking 10,000, at least you should be aiming for 10,000 or 15,000 or even 20,000. So, and you should also have your trading plans. Every trader you see has his plans. You can't just go trading up and down without a plan. No, you must have a trading plan. Make sure you plan, make sure you know when to take trade, make sure you know when to rest, make sure you have targets, make sure you have everything as planned. And planning is individual. I cannot tell you how to plan your own thing. So you just know how to plan. You should know how much you are going to risk. You should know that your capital is so amount. This is the only amount you can be trading with. So it's also very important. Then the last thing is trading psychology, which brings about how much you are entering the market with. If you can risk, there's a saying, risk what you can afford to lose. You cannot use your school fees, your house rent, your something like that and go and invest in the market. You don't have certainty in the market. So there's no way, it doesn't make sense going and investing what you can't afford to lose. Your last 100K, you go and invest it. That's madness. That's crazy. If you have 1 million naira, then you can risk 100,000. At least it will not pain you that much losing 100K out of 1 million. But if you have 1 million and you go and risk the whole 1 million, once you lose the 1 million, you will be depressed. You will go, they will take you to the hospital. It doesn't make sense. So risk what you can afford to lose and always use stop loss. So try and be safe out there. Make sure you know what you are risking. Make sure you know how you trade forex because it might not be suitable for everyone. But the thing is that surely sooner or later it's going to pay. So thank you for listening and see you on the other side.